That was the first time ever a company in India got funded with $1 billion in one check. I remember in 2011 I had Googled for the first time top 10 startups of US, right? To understand what a startup even really meant. You want to do everything possible, especially if you get capital, you feel you're at the top of the world and you can do anything. That drives a lot of wrong behaviors and wrong choices as a business. And hence I believe that, in SaaS you can neither go big overnight nor go home overnight.
Welcome to yet another episode by the Product Folks. Today we are IRL with Dhruvil Sanghvi, who is the founder and CEO of Loginext. Dhruvil has literally ticked all the boxes in life. He went to Carnegie Mellon, he was a consultant in the US. Of course, he's a founder now, he has been an investor, Forbes 30 under 30, and I'm pretty sure I'm missing some buckets here. But if you have ordered from McDonalds, Starbucks, Tacobell, and I'm sure a lot of others in the delivery space, I'm pretty sure Loginext has touched you in some way or the other. So welcome, Dhruvil.
Thank you for having me. It's always a pleasure to talk to you and everybody.
Awesome. Dhruvil, we met at TechSparks and amazing talk, by the way. One of the points that you really struck me was you spoke about building global SaaS businesses from India, but for the US, right? And even when we speak to a bunch of founders, founder friends, and while we were chatting, you mentioned, right, like more than 90% of the questions you get is around how do I GTM in the US, and most of the founders struggle with that, right? They get to that 0 to 1 stage, but going from 1 to 10, 10 to 100, scaling revenue from there on is pretty difficult, right? So what has really worked for you, and what are some tactical things that you think most founders are missing currently?
I'll just straight jump into the details, because I've answered this question so many times. And there are so many, like I was just kind of speaking to you and Suhas earlier, right? There are 3,500 SaaS founders in India now, right? Which is an explosion of SaaS that we are seeing from India to the world. But, and there are so many companies who have done great, right? Like starting from Zoho and Freshworks to Browser Stack and Chargebee to Loginext and many other which are still kind of getting to that large scale. And there are, despite so much of experience in the ecosystem, most of the founders have this general myth that I observe, that they can sell to the world sitting in India. And I think that's number one piece of advice I give to founders, that if you really need to sell to a particular geography, you need to ideally spend more time with your customers there. There's this whole new product-led growth thinking, or a PLG growth motion that people are talking about, where they unknowingly end up believing that a product-led growth means you build product and you put it on the website, you do some SEO and basic social media marketing, which is completely under your control at your home, at your office, and the world will start buying you. It doesn't happen that way. There are so many nuances that you need to learn, which are local nuances, cultural nuances, operational nuances if you are in a verticalized SaaS business. And that all only happens when you spend more time close to your customers. Doesn't happen remotely, to be honest. Like yesterday also, somebody tweeted, I saw that, most SaaS founders think that they can close large deals on Zoom, right? But nobody has really done that. There's also, number two, I also feel that there's a general narrative or incorrect narrative being spread by some of the investors in the community in India, that you can actually close 100K deal, sitting in some city of India or some part of India. I mean, great, you can, and you may do that as well. You may stumble upon one of such large deals, but especially if you are focusing on mid-market and enterprise business, there is absolutely no getting away from talking to customers, right? And when I say talking to customers, not again on scheduling calls, but really spending time in person with them in their offices. When it comes to us, I remember in 2018-19, I've spent so much time in customers' warehouses as well, right? To be able to understand what truly a pick and pack process means from a US standpoint, right? So that is number one advice I would give. And the number two thing is, making sure that when you're launching in a territory like outside India, you don't go global, right? Most founders have this thinking of that we'll build India for the world, right? Which is what investors also say. I also proudly say that India, we are selling from India for the world, but it doesn't happen on day one. You have to first have a category, a vertical, and a geography. You have to have a strict definition of ICP, And most founders don't want to go through that kind of grunt work to define and create focus, which is a very general, founder dilemma or a founder challenge that most companies go through. I think that's the number 2 advice that I give to founders, that when you're building from India and selling to the world, it doesn't mean you start selling to the whole world on day one. Right? On day one, you still have a focused geography, vertical, and segment that you start from, and then you kind of go gradually to from that to the scale.
Absolutely. And I think one of the craziest things that's been happening in the SaaS space is the valuations of companies. Right now, we have seen what's happening with Snowflake and lots of others. So what exactly is happening in the last 2 years, especially after 2020? COVID has brought in a lot of new things into the mix, and SaaS as a space has been like valuations are taking a hit now, and things are looking a little unsettled. So what do you think is really happening in the ecosystem?
So I always call out one point, that for me, the unsettling part was the 2021. Right? When somebody asks me what is going wrong with the valuation, I feel the question should be what went wrong with the valuation in 21, because I feel ultimately every business is fundamentally valued around cash flow, right? It could be present cash flow or future cash flow, in simple words, right? And I'm not going to go into the whole technicalities of that, but that's what fundamentally it means. The moment markets start deviating away from cash flow into, and that doesn't mean that you have to be profitable now, or every company has to be profitable right now, but there has to be some part towards it financially, not just in a storytelling way. There has to be a concrete way towards it. Now, when the valuations move from more of a financial logic to an emotional logic, right, where people start feeling that valuations are, tech is gonna, boom, SaaS is gonna be the next big thing, or for that matter, crypto is gonna be the next big thing, right? Web3 will, change the world forever. Right now, generative AI is, kind of just, gonna change everything we do is gonna be AI tomorrow, right? So the problem with today's world is that the narratives are spread so fast before the reality really hits the ground. And that's what happened in 2021 at a very crazy level, where pandemic, people had some thesis about pandemic built with 6 to 9 months into the pandemic, and people saw that the world actually is somehow still working in remote way. So most of the retail and institutional investors built this thesis that the world has changed forever. We're always going to be virtual. People are going to be in their home. There is newer and newer kinds of viruses and waves that will keep coming up. And since the world has become virtual so much, the natural outcome is that technology will prevail and technology will grow. And everything we do will be tech, right? Starting from your office work to your homework to your education to your spending to your consumer behavior purchases, everything will become virtual. Now that got over-indexed. So the world over-indexed on pandemic thesis too much. That reflected on the public market valuations of the tech companies. Tons of IPO happened at a super highly premium, right? Snowflake had gone public at more than 100x revenue multiple. Correct. Forget about the profitability, right? It was not even in sight. And that felt like the new normal, right? There were theses around this is the new normal. This is how now SaaS is the next big thing to invest into. But ultimately SaaS is also, cash flow kind of a business at the end of the day, where you have to ultimately focus on your gross margin, recurring revenue, net profits and whatnot. And in 2022 towards the end, this quickly started getting corrected, that organizational purchasing behavior also kind of came back to normal. Consumer purchasing behavior came back to normal, not absolutely how it was before pandemic, but it corrected to a great extent and became the previous normal again. And that again drove another sort of speculation that maybe everything was overvalued, so everything started becoming more undervalued. And I think what we are seeing right now is we are back to the same multiples SaaS companies were getting in 2019, 2018. In fact, that's not just SaaS, right? But most of the tech companies are being either valued at what they ideally should be valued at, or maybe slightly below that because of overly negative speculation around tech, right? Or overly overvalued kind of a speculation around tech. And I think overall, as long as founders and investors know what the true value of a company is, these waves will keep coming, and the waves are becoming shorter these days. Waves are becoming steeper these days because of extremely fast information exchange. But long story short, I feel current is the normal and what went wrong was 2021.
The new normal, as we say it.
Yeah, this is the normal, and the new normal was temporary normal was 2021.
Dhruvil, you spoke about founders and investors in this mix, right? But one thing that a lot of people struggle with is while joining a new company as an employee, right? So suppose if I am deciding to join a company at say a Series A level and the valuation is at its peak and something like a COVID happens or anything that impacts an industry, right? Valuations take a hit. I as an employee is the biggest one at disadvantage, right? So how should employees navigate? And this is something that a lot of people within our community are also curious about, and they don't have any concrete resource to go to, right? And they don't have any framework to stick to when they are deciding what company to join, and if they are getting ESOPs, does that even hold real value, especially since valuations are taking a huge swing. So how should an employee navigate this whole situation, and how have people at Loginext navigated this situation?
Yeah, no, that's a great point. I think I strongly believe that the world has a severe dearth of education and knowledge around stock options for employees. Most employees are still taking a blind bet on a company, assuming that I'm getting some good amount of stock options, some value, so must be good, right? And then they again try to speculate based on what the media tells them about the company, right? Even while they are in the company, they have to speculate based on what outsiders tell them about it. But that's not the right way to do it. I've also seen employees thinking that when a company gives them the stock options, they feel that is the value of their stocks as of today, or value of their gains as of today. Now, what it basically means, let's say if you are an employee, you're getting a job, and if your package has, let's say, about $50,000 of stock options in it, it doesn't mean that your gain is $50,000, right? Or let's say if it's 100K, it's not your gain is 100K. Right. It is the strike price or exercise price of that stock. That means the company's stock has to grow from that point onwards, and the net difference from this 100K to the future value when you probably exit the company, or the company buys back your stock, the difference of these two values is what your true gain is, right? And that also gets taxed. So what you get in hand is lesser than that. Let's as an example, if somebody got 100K worth of stock options, over 3 years, the value of stock options has to go from $100 to $300,000, and the 200K of gains gets taxed at if you leave the company in 2 years, it's short-term capital gains. If you do it afterwards, it's long-term capital gains. Long-term capital gains is significant. It's half tax than the short-term capital gain. So if you get short-term capital gain, which is 200K and 42.7% of tax on it in India, that means you get roughly 120K as the actual gain. While you might be thinking that I got 300K, or I was assigned 100K 3 years ago, why am I only making 120K now, right? But that's the reality. So you have to understand what the entry valuation of the company is, and that's why it's very important for every employee to ask their prospective employer at the time of joining, or if you are already in the company and if you're getting more ESOP rewards, you must ask a question on what the exercise price is, and you need to do your math whether this exercise price seems too high or too low. The lower exercise price is good because then you get more differential. Right? And there are laws around it in all the part of the world where companies cannot offer stock options at lower than certain exercise price. So company also cannot offer you stock options at a lower value than their current value, but they can offer at the current value. Most companies, especially I've seen this in India, where they end up giving stock options at even higher value than what they're valued at, which is a wrong practice. And that's what employees also like, because they feel, I got so much more value of a stock, but that's the wrong way of thinking. And that's one correction that has to happen. What we do at Loginext is that we take a ESOP session every 6 months, which I personally take. And usually that's the most highly rated session at Loginext, because we take employee feedback as well after that. Lately I've been getting less time to kind of spend every 6 months, but at least so far I would have done it like 5 times in our journey in last 3 to 4 years. And we talk about public equity, private equity, how stocks work, how private stocks work, what does a stock option truly mean, what is the tax impact of that, and we make it very engaging. We give them real world examples of the brands they know of, right? So they understand, okay, this is called, a stock option of a large company. This is what called a stock option of Loginext. This is how Loginext stock option has been growing historically. So I can speculate it will roughly grow at that stage. Then we also have them understand how to speculate the growth of stock options in the company you are working at, because they have the real data, right? Who knows more about company's growth than the employees themselves, right? Especially if you are in product or sales and marketing, you know how much usage is being happened. You know what the churn of customers is, right? You know what the revenue numbers are. You know what the employee morale is. Right, you know what the management style is and how management is, baked into the growth of the company, how much people are working hard towards a single mission. These are all the signals to be able to speculate. If the company grew at certain rate, most likely will grow at a similar or maybe slightly lower rate in worst case scenario. And that's how you have to then bet that this is the money I'll end up making at the end.
Amazing. No, thanks for sharing that. And it's fantastic that you conduct like these sessions every 6 months, because in fact it's a company's responsibility, right, to educate their employees about their benefits and how does it impact their life, right? Because ESOPs are usually a huge component of a person's career when they take a bet on it.
This actually, the thought had come in my mind like 4 years ago, when a lot of employees used to come and negotiate on stock options.
Right.
But when they leave, they would not exercise the stock options. And then I would feel that if somebody really negotiated something while joining, why are they not even exercising it, right? Because then I realized that even at senior level, they just don't know how this thing works. They just want to have something on their offer letter which feels good. And I thought that actually employees are leaving so much money on the table by not exercising and by negotiating in the wrong way. And that works as a great retention mechanism, because when people truly bank on stock options, then they also feel the stickiness that, okay, now I have to think long term for this company. And they will put company's interest first beyond that. And when everybody does that, ultimately everybody's value grows. Right? It's a win-win situation.
Absolutely. And I definitely feel more companies should adopt this as a practice to educate their employees about ESOPs, because that is where the value lies in early stage, right? Let's talk a bit more about Loginext now. I'm pretty sure a lot of our community knows Loginext as a brand and what you folks do at a high level, right? But how does it actually work? Suppose if I, as a user, if I order a burger from McDonald's, right? What actually happens behind the scenes, and where does Loginext come into the picture in this entire journey, right, from a delivery boy picking up the parcel to delivering it to me? What exactly happens there?
Right. So, and food delivery is the most easiest example to relate to. We'll start with that. So we are all used to this Swiggy and Zomato kind of a world, especially in India, right? Maybe elsewhere people are using Uber Eats or Deliveroo or a Grubhub, and DoorDash and whatnot. And these are more tech companies which have evolved over last 10 to 15 years, and they have figured out how to create a seamless customer experience from an ordering perspective, tracking perspective, expedited delivery perspective. But this is just 10 companies in the world, right? There are at least 9,990 more companies comprising of a 10,000 company market size globally,
right,
where other companies, they neither have this private equity or public funds raised to invest so much in technology. They don't have the DNA to really build this kind of technology, because the leadership started building a food business and not a tech business. So they understand brick and mortar, restaurants, kitchens, food quality and all of it, right? And they know how to build a brand offline, right? So that's something they knew. And the third thing is that they are public companies, right? So they have to still focus on cash flow. So they can't even temporarily burn money to kind of incentivize customer behavior to change, so that eventually they can start making money. Right. Now with this limitation, what happens that these other 9,000 or 900 odd companies, they ultimately they end up working with third-party carriers and third-party software to try to create what a Swiggy or Zomato has been able to create, right? But if you see Swiggy and Zomato has had their own contractors, which they onboarded, or drivers, which basically means they build their own in-house tech end to end, right? And that's how they kind of could get to, and then spend millions of dollars or hundreds of millions of dollars in building that over the years. So what we'd go and tell the traditional players is that if you really want to replicate the success of these new age tech players, you need to, invest into technology which replicates this, and you also need to invest into business and supply chain models which these guys are operating on, right? So let's say for McDonald's, what we do is we help them create their driver onboarding, order scheduling,
So forming their own fleet.
Forming their own fleet. So McDonald's currently operates in more than 120 countries across the world.
Wow.
And we work with them for more than 40 countries across the world right now. And in all these countries, they were working with either an aggregator who would take 25% of the profit directly,
like a Zomato or a Swiggy.
Or if they want to save that 25%, they had to build their own contracted fleet. Right? Now, how do you do that? For that, you need to have your driver onboarding app. You need to have your own driver app.
Very operationally intensive, yeah.
And they were doing it like very manually. So they would try to go with a local contractor. That if somebody has 100 drivers, they would give a contract. That can you do deliveries from my kitchens and my stores in this area, right? And now even that contractor or that small company would be very offline and ops intensive as such, right? So where they would manually, drivers would just go to the store, we'll wait after the store. When the order comes, they would go, it would be called inside the store. Then the store manager would give the order to them. Store manager also would sometimes receive orders on calls. Which is very, very surprising for an Indian audience to look at, but the world still operates like that.
Wow.
So what we do is that we enable them with the whole online ordering channel,
right?
Starting from ETA calculation to scheduling to assigning to the nearest driver. Right? And there are multiple nuances, like it's not always the nearest driver, but also the cheapest driver in terms of how much driver bidding has happened internally, right? And also how much the customer's order size is. So for a large order size customer, you are open to picking a premium driver, which is still nearby and might be a little bit more expensive delivery, but my ticket size is larger, so I can still pay for it. So all that logic kind of happens, and there's tons of other variables like the speed of the driver, if it's a car or a bike or a cycle, right? Which area of the city the store is in, right? So for high density or high traffic zones, like let's say New York City, you have a different allocation engine versus somewhere in Bay Area, right? Which is still like more spread out kind of an area. So we put all that logic, then we do the driver assignment, then we do driver tracking, we send alerts to the customer, we give them a similar Swiggy or Uber kind of an experience to the end customer, even for McDonald's, who would have gone to McDonald's app and not to a Swiggy app. And then we also pay the drivers, so we would do the reconciliation. If the driver was late, cancel the order. How do you do all these adjustments?
So everything happens at Loginext.
This is end-to-end process of back-end delivery after the order is placed, or actually before the order is placed, when you get the ETA, that it's going to come in 23 minutes. From that point to driver being paid, customers invoicing happening, and entire reconciliation happens of the same process. That all happens on Loginext, that too in a white labeled manner. So we basically we allow the customers to take pride that this is your technology and not powered by Loginext. Because that's very important for McDonald's to show to their management and their shareholders that we are actually in control of our tech. Because nobody wants to say that ultimately I'm using Loginext, because then they don't look good internally.
Yeah, totally. And this looks like super operationally intensive, and as they call it, right, these are unsexy businesses that have so many variables in the picture, that has so many factors that any single thing that goes wrong, it will throw the entire thing away.
Absolutely.
Right? And especially Loginext is what now, more than 8 years old now?
More than 7 years now.
7 years now.
We'll finish 8 years very soon.
Exactly. And back then, I think food delivery or e-commerce wasn't as rampant as it is now, right? So how did you go about building that initial V1 of the product, and especially since you come from a background where you went to Carnegie, you were in the US as a consultant, you then decided to come back to India, right? Especially at a point when the ecosystem in the US looked much more stronger than what it is right now, right? So what, two questions here. First, what made you think that India is where the next big opportunity lies? And secondly, what made you work on an idea which is not very lucrative for a lot of founders, right?
So this is more for like SaaS than non-SaaS founders, right? So usually most SaaS opportunities actually come from the previous company that you work for. It's like just most consumer opportunities would think based on your personal experiences, right? That you would have felt it, or your family, friends would have seen it, and then you would build a thesis, early thesis on that, personal problems. So this was a similar one where, so at Deloitte, I used to advise most of the customers which were in retail space. And I remember in 2011, Amazon had filed for their first profitable quarter in public markets. So if you remember, Amazon stock was largely flat from 2000 to 2010. What we see Amazon right now in last 10 years is very different than what Amazon used to look from 2000, the dot-com bubble to 2010.
Right.
And at that time, people were always about like, this company is going to crash, e-commerce will not work, internet penetration is not that high. Smartphones were not there at that point. Like the iPhone 4. I remember I bought the first iPhone 4 in 2011.
Wow.
Right. So that was my first iPhone as such.
12 years
data
back,
was very expensive 12 years ago. So that era, and then when 2011 this movement happened, when smartphone happened, AWS had just launched publicly, right? This Uber kind of models were popping up. So all my customers at Deloitte used to appoint Deloitte or McKinsey of the world to understand, let's build an e-commerce strategy, right? Like how would we start transforming our business?
And at that point in India, these companies hadn't launched, right?
No, I had no exposure to India at that. My first job was in US, so I had no idea about what India is. I had no idea what a startup is. I remember in 2011, I had Googled for the first time top 10 startups of US, right? To understand what a startup even really means. And I remember seeing like Uber, Airbnb as like emerging names. They're going to be like next big thing and whatnot. So from that time and then those 2011 to 2015 is the time I spent advising my customers about the repeat thing. Where I used to tell them that e-commerce is going to be the next big thing, delivery windows will shrink, and these were all more speculatory bets because Amazon was doing it, so we thought the world would do it. And year over year, we saw that Amazon is making more profits. More and more startups are actually entering into this faster delivery space of everything: grocery, food, furniture, random tasks, right? Like errands, like TaskBob was another company that I remember seeing at that time, and that's when I realized that while all this advice I'm giving to all these customers, nobody's really implementing it because they don't really have the tech resources or DNA to implement a platform behind the scenes. And I saw that all of them were actually going and buying Shopify or e-commerce cards, the front ends of it. That was the thesis that if people are anyways buying front ends, even that's something they don't care to build it themselves. Most likely the back end supply chain also they will not build it themselves. And that's when I thought that why don't we have a platform which allows customers to have a plug and play delivery stack with their commerce stack, and that could be a market opportunity. Now it sounds very fancy and very well thought through right now in hindsight. At that time, of course, I had very vague thoughts about it. I had this fear whether it will work or not. At the same time, I used to, whoever I used to bounce it off with, I did not used to get a very, very positive response that yes, this looked like very logical because I had so much context about this industry and nobody else really did. Also, but what was motivating was, I think, my friends and family, which is very important for anybody who is looking to start up, right? Because, and we take it for granted a lot of times, but if you see friction for your friends and family, it creates such a psychological impact on your risk-taking ability.
Correct.
And that kind of worked out in my favor. So I remember, Hardik, who was my roommate in CMU. He was the founder of PharmEasy. He had left in 2012 to start something called as Dial Health, which is now PharmEasy. And he had taken that bet with Siddharth, who is the CEO of the company. And I was like, how are you leaving your job? And I was on the other side of the table where I was discouraging it. Then I had a couple of other founder friends who were taking a similar plunge. And I was like, man, this is actually possible. And I talked to my family, and my family has an entrepreneurial background. We have a family business, so my father was very supportive. I had already, by that time, I had paid back my tuition fees I had taken for my father, just as a feeling that at least I paid back to my family, so I'm net zero right now. And I had some few $1,000s of savings. I'm like, I'm 26. I was 26 years old. So I think all this together, an entrepreneurial feeling, hardworking nature, support from friends and family, and having a sufficient thesis that what I've seen over 3-4 years at my workplace looks logical. And that's why I think the younger you are, the easier it is to take these plunges, because this is the maximum one founder can expect before they can take the plunge full time, resign from their job and start up. That's something I did, fortunately worked out. When Why I came to India though is not really well thought through story, because I wanted to be in US only and sell in US.
Achha.
Because that's the market I had seen. But I remember I had like what 30 to 50k worth of savings, and I had left my job also, and I realized when I was stupid enough to actually even leave my job without thinking this part through, where you don't need a visa to be in US. And you can't sponsor your own visa when you don't have a proper business plan
Company,
and company in place. So that is one. And second one, of course, you can't hire anybody for 50k in US. You can't even experiment with contractor stuff. So I thought that there's no option but to come to India now. So I think my India move was more around like compulsion versus a choice. But I think that was the best thing that happened to me. When I moved back to India, I realized that India was on the cusp of that startup story. The timing was coincidentally very good. Where I remember I moved in 2015. Same year Uber had launched in India. And sometimes when I look back, I feel amazed at what this company has done over the last 7 years, right? Flipkart had raised their first $1 billion round. That was the first time ever a company in India got funded with $1 billion in one check.
That was massive.
Right? And I think last year only they had turned unicorn and whatnot. Paytm was the second or third unicorn in 2015 end. Amazon had just launched in India. Can you believe it? Amazon is just 8 years old in India. And all these trends were exactly around what I wanted to do, that AWS cloud, e-commerce, deliveries, capital, and I had decent pedigree. I was just good at sales and marketing as a more instinctive behavior. So I was good at pitching, organizing information. So investors used to we feel very impressed that this guy can look sensible guy. And I could raise money to experiment, and then rest is
the journey. Yeah, absolutely. And you spoke about raising money, so that's exactly what I was thinking. So we spoke to one of your friends, Dinesh, and what he mentioned was you are like a proper Gujju guy with a dhanda mindset, and you also have raised money. And both of these, although there are a lot of parallels, but usually both of these go different ways, right? Building a company for profitability versus building a company for growth, and at times profitability takes a hit, right? So how have you balanced that at Loginext? It's a tricky space to be in, especially in SaaS, where revenues are usually concentrated in a few clients, and it has been a long journey now, almost 8 years. So how have you balanced your the dhanda mindset with also something that can grow really fast?
No, I think a couple of things. First, I feel that having a dhanda mindset, like being from Gujarati background, being from a family business background, living in Bombay, which is a very dhanda and sustainable city, hustle city as we call it, I think all it helps to contain your growth aspirations, right? Because being a young founder, first time founder, sky is the limit. You want to do everything possible, especially if you get capital and little bit of support from the world optically. You feel you're at the top of the world and you can do anything. And that's actually a very, that drives a lot of wrong behaviors and wrong choices as a business. And I think this just dhanda mindset and the Mumbai thing and, more sustainability thinking slows that process down, and that naturally creates a good balance of growth aspirations while keeping profitability and basic unit economics in mind. So I could never take decisions which were just only growth focused, right? Because this whole behind the scenes, I'm not a pure play growth at any cost kind of a person, right? So I think that's a good balance. One that's an advantage of this kind of a combination.
And this was even after you raised money.
Even after.
I'm supposing there must be investor pressure to grow at a.
So one thing that I also find is a myth, that I don't think there's any investors really put pressure, right? Investors have expectations that too after they have been with you for 7-8 years, because they have to return their fund, and obviously they are in a business, right? So they're not just helping you as a social service. So far all our investors have been so friendly, and all the other founders I talk to, there's the same thing I hear, that and I don't know where this narrative comes in the world where investors do pressure. Investors just never pressurize. Investors have expectation that too after a certain good amount of patience they've already shown, which is for the right and fair reasons, right? So I think it's more of a founder personality or founder ambition, which drives them to thinking that I want to do more, and capital plays a huge role in accelerating that behavior, where to a point where you end up taking wrong decisions, right? And that's just purely in founder's mind. I think nobody else is responsible for it except for the founder. And for us also, of course, for me also, I have had these feelings. Why I'm able to talk about it very confidently, because I've been through that cycle myself, where after raising money, it felt that we could just do everything. We wanted to do deliveries ourselves also. We wanted to be a SaaS as well. We wanted to do India and US and Southeast Asia and Middle East markets. We wanted to do 10 industries together. Like we would sell to steel companies also, manufacturing logistics also, food logistics also, right? And we would acquire a company also. So we acquired a company as well, very early stage, like 5-6 years ago. And this is all wrong decision making, right? This just basically stretches you so thin and defocuses the hell out of you. And the answer is always negative. So fortunately, I think in 6 to 9 months only, I saw that kind of burn in 2016. Not just the burn from a cash burn perspective, but your team starts to stop supporting you, your customers stop supporting you, the markets kind of give you the signals that you can't do everything well, right? And then some of the customers churn as well. And then you realize, let's take a step back, let's focus on something, and then you truly go deep into it, and then kind of you go from there. But I think overall, a Dhanda mindset is kind of very, very important for all the founders, I feel. And I think generally, Dhanda mindset founders are only the ones who start SaaS companies, because SaaS is actually a generally more saner model to run, right? Like the consumer tech is something where you see like go big, go home kind of thinking.
Correct.
In SaaS, you actually can't, neither you can go big overnight, nor you can go home overnight. I'll tell you why. Because no matter whatever marketing efforts you do, it's a business you're selling to, and they will not take impulsive decisions where they will be like, oh, you know what, this is a sexy product, let me just buy hundreds and thousands of dollars worth of licenses. They'll never do that. So your marketing and capital will never convert into growth. So you can't go big overnight in SaaS. And second is, you can't go home overnight because you have a cash flow. Your customers are giving you revenue. Your customers are with you, and if you die, your customers will try to actually have a conversation with you, telling you that, can you not die, because I'm really running my business on you. Like right now, many of our customers, enterprises, they run entire delivery stack on us.
Yeah.
If we are down for 1 second, we start getting not just tickets, we start getting calls. After 1 hour, the CEO of the company starts calling me on what is going on, because they lose so much of revenue. The drivers get stuck on the road. Like imagine a driver going for the next delivery, don't know what to do next, right, on the road. And there are hundreds of drivers like that who get stuck on the road. So hence your customers will not let you die. And hence I believe that, in SaaS you can neither go big overnight nor go home overnight. And that's why I think most Dhanda founders would usually prefer SaaS versus anything else.
Yeah, and I think the way the SaaS business models work is, when initially when the founders are building, there's a lot of servicing component to it, right? At least to get your first few dollars, you kind of go on and do some servicing while you're also building your product, while you're also perfecting your product as well, right? But as you grow, that percent, if it grows to say like let's say for example Okta, right, which is a public company, that almost 35% of their revenue still come from servicing, right? So how does a founder decide where to draw that line, right? What is a good enough ratio to have your revenues via product or service, or does it even matter, right? It can go up to say 50-60% of your revenues come via service. Does it even matter, or do you draw the line somewhere and decide that, hey, I'll not service more clients beyond this, and I'm going to focus on my product and make it better?
Yeah. So very interesting question on the licensed revenue or a recurring revenue versus service revenue and non-product revenue, right? See, we are living in a world where this whole product thinking has been, has been talked about so much, where people feel that is the only thinking to have. While great, it's great to have product thinking. It's a strength of a founder. It's a strength of a team, and that truly creates scalable businesses. You cannot discount the whole services part of it, especially when you're doing SaaS, unless you are extremely convinced that micro SMB is my market, right? And it's a large market, and no matter what, I'm just going to keep attacking it. If you're so convinced, then it's okay. Otherwise, it is important to do some of the services. What it basically means is that, especially in the early days, every SaaS product goes through iterations. Now you can choose to not listen to your customers and keep your own iterations, or the easiest way is to listen to your customers and charge them money for it and then build it for them. A lot of times what happens is that founders and teams have their own thinking in terms of what truly the customer needs. 20% of the time it is wrong. right? You might be right 80% of the times. You might have done enough discovery calls, customer interviews, user behavioral patterns, and offline research, investor discussions, and whatnot. But there's always 20% things that customers would know more than you. And if they are willing to pay for their thinking
then
also, then might as well it is believe it and go with it. Now, that naturally leads to a dissatisfaction in the founders mind that, oh my God, but then all my revenue is not recurring revenue, all my revenue is not product or license revenue, all my revenue is not high gross margin revenue, then should I still do it? It's fine to do it. I'll give you an example. There's a company called Okta in US. There's another company called Coupa in US, right? Both these companies has had close to 65% of their revenue coming from product. 35% was services revenue all the way till they went public. Now, what they showcase to the world always is they talk about this beautiful or glamorous or sexy looking part of their business and do not talk about the services part, which is for the right reasons. But if you look at the financial statements, you can see there's actually other part of the world as well, where their customers do want them to change or enhance their product based on their requirements, and it's okay to charge them, right? And as long as you are not, it's not a slippery stone and you don't get carried away into building anything or everything that the customer tells you to do, right? And with a product mindset, you anyways are able to balance it, unless you don't go into another extreme. I have seen that some founders have this feeling that they should just not do services no matter what, and I think that's the wrong mindset to have at any scale of time. Currently for us, we do about 15% of our revenue from services. We never talk about it, nor do we report to our investors very actively, nor do they ask that, hey, what is your services revenue? As long as my license and product business is growing at a good rate, right? Whatever I'm doing to support it, that's fine. And that's what my recommendation to all founders would be.
I think one of the reasons this starts happening is because cracking those initial few clients is like super tough, right? Getting that one big name, especially for you, like you work with McDonald's, Starbucks, etc., right? These are massive global companies with delivery fleets, all like you mentioned, like more than 40 countries for McDonald's, etc. So what was that journey like, cracking the first big client, right? If you can share maybe a story, that would be great, or what was your rationale behind approaching a client as big as, say, a McDonald's, and how did you go about it, like from a tactical point of view?
So I think the first thing, it always feels very fancy for as an outsider to think about it. This company must have done a great job at cracking McDonald's, but it's a very simple process behind it. The first step is to obviously build your basic demand generation channel, right? This is how we acquired McDonald's as a lead itself. So we were doing more and more newsletters for US market. We were doing more events in US market. We were doing, in this is 17, 18 time frame. And at that time, we were also building our SEO for US market. Now, we were just doing basic stuff SEO, right? You would pick your top keywords, you would create interesting content on it. In events, you would sponsor a booth, you would have some speaking slots, you would go and meet as many customers as possible there. So nothing fancy. But out of all these things, over a 6-month period, you will start creating a funnel of leads. In the beginning, most of your leads become SMB because none of the large companies would notice you, right? But after a few SMB closures and sufficient compounding effect on your marketing messaging, where people will see you over 2-3 events, where your booth is becoming larger now, right? Because you acquired some small revenue, so they see you growing. They see that now you are showing up on more and more analyst reports. You are showing up on more and more SEO searches, right? So then naturally, one fine day you would kind of just want to talk to us, right? And that's when your step one and the most difficult thing is done. So we had gotten McDonald's as a lead like this inbound on our website. Right? We never thought that we would actually get it, and we kept on getting some basic interest from some more junior workforce from McDonald's, also organic only, purely. But this is not just, we would not attribute all the success to organic only, because we would have done these events and other stuff also, where some attribution would have happened. Now it's difficult to measure, or not sometimes possible to measure. So that's why it's a collection of things. But the lead came from our website. It was a contact us form. They did not even sign up for a free trial. They just contacted us. We want to talk to you.
This was in India, or?
This was in US. We were in India. I was in India at that time. And we had no US workforce whatsoever. So they identified us, and we were very excited. We researched about the person. It was a VP of delivery. We were like, perfect, this is the exact person we always want to talk to. And now they have kind of reached out to us, right? And then when we scheduled the first call, I was on that first call itself, and what they talked about was their RFP. So they were kind of bringing in RFP at that point in time, which they wanted us to be a part of. They had very large companies and they had a mandate that we'll also bring some early stage companies to see what these new age startups have to offer.
Right.
So they were more on the exploratory stage that let's get you in the mix. And let's at least see what you have, because we're talking to Oracle as well. And we'll most likely...
And they had launched in India back then, or their delivery services?
No, which one? This
McDonald's, yeah.
At that time, McD was in India, but McD was doing only with these delivery aggregators, from what I remember, in India at that point in time. I could be a little
So they
off
went
there.
to the market with you folks in India?
No, this was only for the US business. It was a US person, US business. This was not an India lead at all. It's just that we were an Indian company and I was in India. That was the only India part about it. It was a US business purely. And we kind of, we got that lead. And then the RFP was actually just next week, because they already had done all the RFP submissions. We had 1 week to submit the RFP, prepare for a presentation. I flew to US from India overnight, did the submission of RFP, presented there. When I was in the RFP, presentation, they have like 2 hours slot they give to all vendors, right? So there's 1 day show, 2 hours each vendor, and you would see like a Oracle coming up with the transportation management, like a 5 people, senior sales folks, all that stuff,
Very
like jazz.
intimidating, I'm sure.
Very intimidating, and I'm like, the CEO himself is coming and selling here. But when I did, I've entered based on the product value and based on my the whole way I could present, it was very compelling to them. They went deep into the product. The 2 hour became 4 hour. They moved the next presentation to next day just for our presentation. They were so impressed. They had a special meeting that we should this time try out a new vendor. Or a younger vendor, which might be risky. We'll do a security check on them.
Especially not from US.
Not from US at all. They took that chance. They gave us a $20,000 ARR business at that time in 2018. And then we kind of just delivered value, customized the software a little bit for their needs, which were extremely valuable for so many other customers, because some of their business intricacies only they knew. There was just no way to find it, and this is how truly a fleet is run. Did all of that and then kept on growing. Currently we do close to $2 million ARR from one customer. So from a 20K to 2 million just from one customer is how you can grow. And it's like a 5-year journey. But it started by a thought that let's have an event in US. Let's do some SEO. Let's write some content for US. So it's a very hard work and consistency kind of an approach, but it always pays off.
Absolutely. And so a lot of community engagements in those specific geographies really helped. But what was the insight behind? Did you already have US customers back then when you decide to do these events and focus on SEO for the US audience, etc.? Or was it purely from a perspective of acquiring customers? You went to it with this rationale?
To answer, so on the US customer side, we did not really have. So in 2017-18, we hardly had any US customers. Like we would have some small and mid-sized US customers. We did not have any enterprise customer at all. And which is the reason why we wanted to start investing a little bit into the events and some of the community engagement and content and all of it. It also, I sometimes sense that most founders or teams feel that it might be an expensive activity to do in US, and that's why how does a early stage company do? But it is actually not that expensive. We would have spent only $100,000 to $150,000, which I know it's still a lot of money for very early stage founders. But if if US is your true market and true focus area, spending $150K over a 9 to 12 month period is not a lot of investment. And this one includes my content creation, create certain persons like content writers salary, this which is only focused on US content. This
event organizer
include my event sponsorships, which were about 50-60K over 3 events is roughly. It includes my tickets from India to US. It includes my staying cost with one more salesperson who would travel with me. And what else? There's actually just no additional cost.
No US office as such back then, right?
I heavily discouraged people from having any US office or US hire before you hit your $500,000 to $2 million ARR, because it's not required only. You will just end up spending money on things which doesn't matter at all.
Right.
And then it will feel very expensive.
Right.
Like most people think that, I'm going to hire a dedicated sales guy in US on day one.
Right.
There's no way a non-founder, no matter how senior and how experienced that person might be, they just cannot launch markets, right? Again, this is all early days. I'm not talking about very scaled companies. But in early days, the founder, him or herself, has to go spend time with the customers, because while it's, again, in hindsight it looks very easy, that presentation that I did with McDonald's, right, and the RFP submission I had, I learned so much about what kind of questions they ask. Right, I can extrapolate that if RFP submission has these 100 questions, they will probably ask me other 20 questions on site, which I have to prepare for. Now these kind of judgmental calls only founder can take, and why? It's not because founders are smart or anything. Founders just have so much of context over last 2-3 years before you got to that point where you got this lead, right? And you know how to serve that lead and how to convert that lead. If they are negotiating on the pricing, how much price, how much undercutting you want to do, right? Maybe you will do it for this deal but not the next deal. That judgmental call also has to happen. So all these things happen in parallel to a sales cycle, and hence it is very important for a founder to kind of just be a part, intricate part of this process, which leads to not having a US salesperson at all.
Right.
And US office, though, even today, half of our workforce in US doesn't go to office.
Wow.
Because of pandemic, but I'm pretty sure even without pandemic, like, there's not as large of an office only there where people have to kind of go every day.
Right.
Right. So then US office expenses just kind of extra overhead people end up taking. Like, people think events and booths might be very expensive. It doesn't, right? Like Gartner also, if you want to sign up with Gartner, they cost you something, but Gartner also has a sales cycle where they will give you a 6-month experience free.
Right.
If you are smart at negotiating.
Right.
Right. So you can get Gartner for free little bit. Right. You can get some free media attention also if you're smart. You can get some. I got this Nathan Latka podcast.
It's pretty big in SaaS,
which is big in SaaS. So other SaaS people knew about me. So these are all the growth hacks, as we call it, right? Which is very similar to one would do in India also, right? When in India somebody starts, when you don't have any capital,
presence,
what do you do? Exact same things you do in US also. Yes. And then it will not look very expensive.
Right. And this is super interesting, by the way. And when, as a SaaS founder, if I am looking to go open a new market, right, say for example US or Europe, it could be any market in the world, what are some common mistakes that you have seen founders often make in launching a new market or going to a new market with their product? Are there any like common patterns that you have observed that, hey, this is something that a lot of founders miss out on?
I think number one mistake is trying to hire people locally. That's just a consistent number one mistake I've seen and I keep seeing. And I don't know why people have this desire to hire somebody local. So that's one. And number two is not spending enough time in front of the customers. Especially, this is more true after pandemic, because most of the people and team are thinking that, even if, hey, I could get 10 leads remotely, I could talk to them. And to convert it, what's the problem in it? No, but if you had gone there, the other 8 would have taught you more to increase your conversion ratio in the next 10 leads, which is something that nobody thinks about. And third is that people think that every new market has some it's culturally different. Right. This is something I keep hearing from my team till date, where I hear that, no, Japan is a very different market. Saudi is a very different market. No, Latin, very different market. But it's ultimately people are the same. Businesses are the same. Buying behaviors are the same. What differs is propensity to pay, right? Like how much, what the ARPU can change. There could be local nuances, which are again 20% language difference. Culturally, of course, these are differently very diverse countries. But when you do business, it is business, right? Somebody would say that in Saudi people value relationships a lot. I'm like, who doesn't value relationships a lot, right? Like in Japan, people are very disciplined. So does it mean that you should not be disciplined outside Japan? You will be as disciplined as you are, right? Like you will not show extra discipline in Japan, right? Like, so these kind of things that I keep hearing. And I don't know why people think that. There are a couple of things I can say.
Amazing. Thanks for sharing this. And I think a couple of minutes back we spoke about cracking a new client, right? Getting a new client on board. But what is even more important is retaining them, right? Like you can maybe with a lot of hard work get, say, a McDonald's or a Starbucks, but retaining them for so long, and especially like you said, right, even if the system is down for say a second or a minute, it impacts their business a lot, right? So what are some things that has worked really well for you, especially from a retention point of view? Because in SaaS you are either acquiring or retaining, right? So what are a few things that have worked really well for you at Loginext?
I think the number one thing when it comes to customer retention is very cliche answer, but it's product stickiness. Now, product value is one thing and stickiness another thing, right? Typically, there are certain use cases which are not very transactional or recurring use case. If your product is delivering a non-recurring use case, you are solving a non-recurring pain point.
Right.
Right. And that naturally leads to a point at some point where customer would be like, why am I spending so much on my non-recurring pain point?
Right.
Right. And that time there are chances of churning.
So this is business crucial, right?
This is business. Right. So I think for us, our use case earlier was real-time tracking when we started. Now tracking, actually we realized that it's not a recurring pain point. It's a more of a good to have, not a must have in simple words. So if you have something must have every day, and doesn't mean that every product from day one or every successful company from day one had a must have problem, right? Now it looks, because once a company becomes successful, it feels it must be a must have product. But there are iterations that you go through. So we went from real time tracking as a feature to routing, to auto and dynamic assignment, to payments, to now like end-to-end automation. Then maybe we have some fintech and AI parts to it also now, right? Where we give auto customer support to the end consumers. So we go deeper and deeper into the use case, and then it becomes stickier and stickier. Right. So I think that's, long story short, that's very important to have a recurring pain point that you are solving. So that's one thing to retain. That's something we did well. The second thing is, and that's what I mean by product value, right? Sometimes the value is the short-lived value. Like in our segment, there's a category called network optimization, right? Supply chain network optimization. Sounds very fancy, but people don't do network optimization every day. People do network optimization once in a year, right? Now, when you have a SaaS model for a once in a year problem, it's like appraisal management software for HR, right? It's not a recurring pain point. I don't think about appraisals every day. Right? I think about it like once in 6 months. Right. So that kind of, that's the difference that you have to kind of identify. Not that nobody should be doing appraisal management software, but how do you link that problem with a daily pain point that a team is facing or an employee is facing, and then you kind of link it with that. So that is there. And I think for retention, second is, for any business, be it SaaS or non-SaaS, customer support is very, very important. Again, as a product business, we all, especially tech founders and engineer founders and product mindset founders, end up assuming customer services, as long as the product is great, it's okay not to have great customer support. Right. When I say customer support, even if it's call based or automation, it has to be smooth, it has to be quick, it has to really solve customers' problem in a true sense, right? Instantly and in true sense. Like, again, classic example we keep is Uber, right? Like it's so easy to, there's nobody in the world has talked to an Uber customer support, but it's an amazing customer support.
Especially in India, right?
Especially in India also, right? So that is one thing. Similarly, in our business, every time a customer has a ticket, and this is very classic for SaaS, where customers talk to a ticketing tool, right? Now this ticketing tool doesn't always have tickets which are bugs in the system. 90% of the tickets are questions which are already solved in the product. There are guidances, there is training material, there is help center online, there is API documentation, all of it. Still 90% tickets come as the same questions which are somewhere answered, right? And customers still want that to be answered immediately. And we try to automate, we try to make it faster, either in a human-led approach or a non-human-led approach. But the answer should be solved, right, quickly. And you won't believe, most of our higher NPS responses we get because of great response to customer support. Right? Users a lot of times take product quality as granted, because once it's solving my problem, I will end up taking it for granted, and my daily customer support needs is what will be on top of my memory as a user. And that drives high NPS. That drives high stickiness, because then you're spoiling your customer with amazing customer support. Right? And then the chances of, even if they get the same product somewhere else at a cheaper cost, they'll not go, because your customer support was amazing. So these things, I think I've seen most new age founders don't value as much.
Right. Well, thanks for sharing that. And slightly switching gears here, right? And it was great to know, especially since you have been sharing numbers, you have been sharing anecdotes, makes it all the more informational, right, for everyone. So I'm sure everyone would be enjoying it so far. And slightly switching gears to you as a founder and how do you manage things and team building, etc. Right. So one of the things that I'm personally very curious about is, especially in this market, right, where we all know the talent market right now, right. There are companies which have been throwing money at it. Some companies are trying innovative ways to solve that problem. Some companies are struggling with culture and retention also, right, and very publicly at it right now. So what have been your learnings around team building, especially when a company is funded also, right, when you have money but money can't solve all your problems, right, especially when it comes to culture, when it comes to retention, when it comes to having them realize the real value within the company, etc. Right. So what are some things that has worked well for you?
I think, this is a question that we used to ask a lot in the early days, and we have lately in last like 2-3 years been able to solve it to an extent. Is understanding what your differentiator is as an offering to your team member, to your prospective employees. Some companies have, being the top paymaster as the differentiator. Some companies has work-life balance as a differentiator. Some companies have some path-breaking innovation that they are doing, which no other company is doing as a differentiator, right? And some companies, like for us, it is the differentiator is that we truly invest into creating high growth, high learning, and fun experiences for people, right? Now, what it basically means
high
is
growth, high learning, fun experiences.
And fun experiences for people. Now, what that basically means is that we have a hustle culture where even if somebody wants to just settle down and say, I'm here for a long time, I want to take it a little light, we just can't settle with it. We have a cultural element where everybody has to grow. Some people don't like it, but that's something we are very open about, and that's our differentiator. Right. Now, we will not offer our differentiator, right? If it's a differentiator, we would offer it to everybody, right? We proudly say that we are not a company where somebody would come and seek work-life balance, right? So if that's your agenda, probably we are not the right place to be, right? So if you are in that career phase where for next 4 years, 5 years, I want to accelerate my career, I want to wear multiple hats, I want to have multiple promotions, I want to have a great financial growth, right? I want to have a great stock growth, right? We are the right place to be. If you're in a phase of your career where you want to just hustle out, work hard, very young person, right? Like especially freshers or with 2-3 years of experience, people are in that phase where they want to have fun. They want to build long-lasting mentors for their careers. They want to travel with their team, right? A lot of sales and marketing, go-to-market talent, they want to go and see all these geographies, right? They want to expose themselves that what is it to even talk to differently, different cultures, different countries, how a Saudi sales cycle is different than a US sales cycle and an India sales cycle, how pricing is different. Will expose you to all these things very early on in your career. And of course, fun part is basically we party hard a lot, we travel a lot together. Like I remember we used to, in 2016, we had this thing where we used to go to like Lonavala, every quarter. Then we started going to Goa every year. Then we went to Maldives. Then we went to Greece, right? So, and we would create workations there. So it's not that we just go there and do chilling only, but we have a 3-day non-stop workshops also, and then 3 days of free time. Fun, right? So where we would have, we would take this ESOP sessions there. We would take negotiation sessions there. We would take product sessions there in terms of, we would invite, we would actually have some of the ex-employees coming and talking, fully paid trips. We would have some of the mentors coming and talking at Greece, 2-hour session. For them, it's a great trip. For people, get value. And we are all outside the workplace, so we kind of, have a different perspective when we are not in the daily grunt. So this is all our USP. We package it in a very beautiful way to our incoming employees and when we attract talent. So that they are aware in terms of what to expect here and why am I even joining this company. So I think that is very, very important for employee retention, and I think a lot of companies and founders end up confusing this whole thing with something called as culture is your differentiation. Great, but what in culture, right? So I think that's where the difference comes, that everybody today knows that culture is the differentiator, has to be a great culture. But if you cannot define your culture, you cannot differently define your culture, it's a problem. Because then everybody is telling me, culture is my differentiator, but what in it, right? And if you can define it well, your team members will experience it in that direction. They'll evaluate you as an employer in that direction, and they'll rate you also correctly, right? Versus them expecting and evaluating something else, and you are actually offering something else. And if they evaluate you correctly, they most likely become your promoters, where they can define it to many people in the world
Yeah.
in the same way, and that helps you attract more talent, and the cycle keeps on going.
Absolutely. And how many employees does Loginext have, by the way, right now?
250.
250. So these entire paid trips to say location like Maldives or Greece, right, would come, I'm assuming, must come at a huge cost to the company as well, right? So how do you balance? Now obviously there are companies which like you said, right, the differentiator is sometimes they can pay really well, or they can have massive perks, or they can do these things. But how do you balance both of these and ensure that it is not a huge expense as well for the company, because it's at a growth stage right now, so that matters as well. But at the same time, like you mentioned, high growth, high learning, but fun experiences as well, right?
So I'll give you some detailing about that, right? Yeah. It looks very expensive from our outside, but it is not, right? Wow. Like I remember, so in 2016-17, we used to take these short day trips, camping trips and all. Everybody does that, right, in today's world, which used to cost us $100 per person, roughly, right? We upgraded ourselves next year when the business grew to $300 per person kind of a spend. Then Goa costed us roughly, let's say, $500 per person kind of a spend. Then we did Maldives, which costed us $1,000 per person kind of a spend, right? Greece cost us $3,000 per person kind of a spend, right? Now, when the spend is increasing, like why? But the salaries are not going to increase at such a rate, right? So the percentage cost increases, but it is still at a company level. It costed us roughly $300,000 ish, roughly. Now for our revenue scale, right, it is a roughly 1% impact at the revenue level. Now, could I have given, or could we have given 1% extra salary to everybody? Wouldn't have mattered to them a lot, right? Most people would have paid tax on it and saved it and done something, whatever thing with it. But with this, we could really bring our global workforce together, because out of those 250 people, only 200 are in Bombay office. Other 50 are spread across the world. Our go-to-market teams largely are spread across the world, right? So they seldom get a chance to spend time together. And if they anyways, all of them have to come to India, right? They might as well, Indians would go to Greece. And actually the flight expenses are the only biggest expense as such, right? Otherwise, you can always, if you book a great resort, you can optimize for it. You can optimize activities around it. We also optimized the time of it, right? So we went to Greece in January end, where nobody goes to Greece, right? So the whole island, like Santorini, was like largely open. The weather was not too bad, little cold, right? And people loved it, right? And actually there is no other time for 200 people to go to Santorini, because there is no resort we can accommodate 200 people in a peak season. Wow. So there are smaller nuances which makes it a very different trip. And we tell this to other people also, that this is how the whole trip was planned, and why now, why Greece, what the spend was, thing to do, and we got every single bang out of our buck. Yeah. So that's, I think I heavily recommend, especially for remote cultures. Absolutely yes, right? Like if you don't have an office, like you're saving so much money on your rent. Yeah. Now this 300K may look little higher for a little larger company. You don't have to spend that, because you're always spending per person. Exactly. So rather than spending per seat in your office, you at least might as well. And then this bringing people together, they start feeling for each other. Like we had people flying from Bombay, Delhi, KL, Indonesia, Dubai, Europe and US. From 8 countries I can talk right now, right? Which is amazing. Yeah. So, and we just cannot do it every quarter. Yeah. The only time to do it is like once in a year for 1 week.
Exactly. And I'm pretty sure then these people would talk about it to their friends also, right? And it has a massive compounding effect, not just on retention, but in people knowing that this is a high growth, high learning place, but also a lot of fun is being had, right, with the employees. And I think one important thing that you mentioned earlier was that you are very upfront about it right from your hiring process, right? You tell them that, hey, this is a high growth company, and you would be expected to work, push harder and go even higher, right? How do you spot the right talent that way? Because I'm pretty sure you must be getting hundreds of candidates inbound now that Loginext has been around, and it is well regarded in the industry as well. So how do you spot and choose the right talent, saying that, hey, this person might be a great fit at this stage of the company? Maybe like when we grow, we'll figure out the learning process for them as well. But how do you get the right people at the right time in the company?
I think, first of all, it's a very difficult problem to solve and there's no right answer here. How we try to solve is that we try to solve it at our top of the funnel level. Now, what that means is that we run recruitment as a small sales function, where we have an ICP, where we have an ideal employee profile, IEP, let's call it. We think that which geographies and which channels we should acquire them from, right? We have conversion rates at every interview level 1, this much of drop, interview 2, this much drop. Then we have a case study that we take so that we know whether people are willing to even invest 2 hours doing something for us to prove their mettle. We get a great drop there, and then we have a last round, and then we make an offer, then offer acceptance, joining, so the whole funnel, and then we consistently week on week we review it, just like how a sales funnel would be tracked, and the conversion ratios have to stay intact.
And this is across the stack, like only for junior folks, or
everything. Our entire hiring runs like a sales process. And we have our ATS is like a CRM, right? So where we would have all these reporting dashboards created. Every week anybody can kind of go and optimize their funnel. If they need to, if they see that, okay, now my funnel is kind of becoming weaker, I need to add more at the top of the funnel. If I have to add more, which of my channels is working out better? Does AngelList work better, LinkedIn work better, or agency A work better, B work better? Or we went to this event in IIT Bombay where we kind of got, like, not just the fresher resumes, but we got a lot of alum resumes also, where senior folks also, right? So things like that. And that is how we will also spend on marketing. That if we see that we are to increase across the board, we would do more newsletters. We would buy data of Bombay professionals or people who are from Bombay. Or we would run LinkedIn ads. Or we would say, okay, this month we need to do a campaign only with agencies, where we kind of just talk to all the agencies at their senior level folks, that they pay more attention to our account and they get us more employee leads ultimately, right? So it's a very structured function that we run. And of course, we still have our own challenges in terms of with so much of analysis and structuring, we sometimes become slow in hiring. We are very picky on hiring. Our acceptance ratios are 1% out of all the inbound that we get, right? So if you want to hire 100 people, we need to have 10,000 resumes screened, relevant ones. So it is a bit of a problem that way. But I think we find it more of a controlled process that way, and we know what part of it is not working out and where we need to spend time, money and energies to improve so that we can hire the right people.
Right. And this is heavily process driven. So as you as a founder, you as a person, are you big on processes, productivity? Are you a productivity nerd, by the way? Or something? What is your productivity stack look like? Are there like tools that you use to run the show, or how does your productivity stack look like?
Yeah, no, I think big fan of tools and processes. Like I've talked to a lot of other similar sized companies and their founders, and I know that I've validated myself at a very nth level that yes, we actually sometimes like do it little overdo it, if at all I can use that word. And that's why we know that we don't need to do any process overhaul or tool overhaul. The stack we use is, of course, for every department we have different tools available. We currently use more than 100 SaaS tools across the company. We're a 250 people company and we use 100 softwares. Starting from an engineering productivity tool around basic like Jira's and of the world. For CRM, like our sales and marketing uses like at least 15 different softwares around all these things to measure every single attribution software, and then customer relationship management software, onboarding optimization software and whatnot. And I can go for hours on that. Yeah. Personally, I think my productivity stack is largely dependent on Asana. So I just use it for my personal sanity as well. To an extent,
so this is not across the teams. This is for your own personal, or
Asana is for teams also, and then for my own tasks also, I kind of put it in Asana, and I think everybody's task is kind of has to be in Asana only. And Asana is when we have this whole KRA breakdown, right? So all organizational goals and how they break down into every department, and then we have only 2 or 3 goals we would sign up for every year, right? And everybody has to link their goals to these 2 or 3 only in a measurable way. In Asana only, and whatever is not there, we just kind of would just not consider that, and we'll keep reminding people that if you are working on anything which is not in Asana, please remind yourself not to touch upon it, because either you are valuing it a lot and company is not valuing it at all.
Right.
So you will at some point find yourself in a situation where you would have worked hard without any value, and you will not get rewards for it. Personally, again, like I start my day with usually the first hour is kind of reviewing my Asana board and kind of opening, checking emails. I go with a general mindset where I would touch upon all the bad things first. So all the things which are broken, right? Like when I am very fresh, I would sign up for the toughest challenges, and I would get them out of the way. And if I can, and when I truly get them out of the way, it feels very successful in your own day, and you feel more confident, and that helps you have a much longer day versus feeling stressed out in the evening, right, and getting tired or exhausted too early. I've also seen some people accidentally or unknowingly end up picking smaller tasks in the beginning, right? They would,
just to tick off,
and they'll feel better about, achieving smaller things. Somehow it doesn't, like I just don't work like that, so it doesn't. And I also advise that, by doing small things at a daily level, unless you are, not doing well in your career, you're borderline depressed, then these things are helpful. But if you're having a usual day, sign up for bigger challenges in the early on in your day when you're fresh, versus parking it for the deep end of it.
Right. And are you big on async work or sync work? How do you like to work generally?
I think I would say largely async work, right? Like, because we have so many time zones, right? So it's just not possible to do a lot of sync work. And async work allows me to kind of also not run my day purely by meetings, because some conversations also go a little beyond. Some topics cannot be squeezed into a 1 hour meeting, right? And we are in the half of the conversation at a peak of a discussion. We would rather end it even if it takes 1 more hour. That naturally puts some other work to an async mode, right? So
a lot of writing, documentation.
We do a lot of documentation, yes. Like everything has to be documented. Everything has to be in tools. Nothing should be on emails.
Wow.
Nothing should be only on emails. Nothing should be.
What's the primary mode of communication, if not email then?
Tools, like for example, so we use Google Chat. We don't use Slack. We do Google Chat only. So Google Chat is where we kind of do more async work. WhatsApp actually works a lot on async. Like I'm used to sending like voice notes to people, where because I feel a little tedious to write a long contextual story, right? Like yesterday I was talking to Anand Jain from Clevertap. Like then 9:30 p.m. last night, our engineering lead came and said that we're building this API, endpoint protection. Should we build it in-house or should we, Cloudflare is pitching us. Should we evaluate them, or what's your view? And I'm like, honestly, I don't have a view here. So and Anand just yesterday only at TechSparks, he was talking to me that, hey, we have done a lot of stuff in-house on security. We have a couple of vendors. They were showing me this whole security page that they have on their website, very detailed one. And of course at 9:30 p.m. I didn't want to pick up the phone and call Anand, because assuming he must be busy or might be done with the day. So I sent him a quick voice note that, sir, ye mujhe janna tha. Like you asked me, we talked about security, and I know we talked about API endpoint security also. So are you doing it in-house or you have a Cloudflare? Because I know you mentioned Cloudflare somewhere in your conversation. And this morning he replied with a voice note. And I forwarded that voice note to my engineering lead. This is my viewpoint. So it just happens so quickly, easily, so frictionless.
We open it 100 times a day. So
otherwise, I have to send in. Other option is to schedule a call or introduce. Hey, Anand, I'm connecting you with my engineering lead.
would have taken 3 days.
Then they would say, oh, Anand, how are you? When are you available? Oh, I'm busy this week. Monday, 11 a.m. The simple 2-minute conversation would have taken 3 days.
3 days, correct. Makes sense. Dhruvil, another thing that I noticed, and we were chatting about it earlier as well, is you are also an active angel investor, right? You have invested in more than 50 companies, you mentor them, invest in them, and we were speaking to Divyanshu also, in whose startup you invested, and I think it was pre-revenue, pre-product when you invested in him. So what makes you what are like those 3 things that you see in founders, or say, let's take Divyanshu's example here, right? What are those things that you see in founders saying that, hey, even though the product is not there, the revenue is not there, but you build enough conviction to take a bet on them, right? So what are some key things that you look at?
I think for pre-product and pre-revenue founders, the biggest differentiator I find in today's world is if a founder is market focused or feature focused or product focused. Divyanshu at SourceWiz, he's one of the guys who out of 100 founders I would have talked to, there are only 10 who talk about market first. How big of a problem it is, who all is facing it, how long have they been facing it for, right? and having a deep understanding and conviction about the problem exists and there is willingness to pay for it. Then solving for it, I feel, is still relatively easier. It is equally important, if not more. But I think most founders end up talking about what they want to do, how they are solving it, and why their product is amazing, versus talking customers and market first. And 99% of the times, all market wins, right? So, founders can be smart, product can be beautiful, funding can be unlimited. But if your market is just not there, or if it's not large enough, or if the pain point is not deep enough, people will not buy you today. Maybe they'll buy you tomorrow, right? So I think that is the differentiator that I look for pre-revenue, pre-product founders.
Right. And I'm pretty sure you must be getting like hundreds of pitch decks a month, and it would be crazy, right? Especially since your primary role is being the founder at Loginext and running the show here, right? And everything else comes as a part and parcel of it. So how do you manage this? How do you like actively screen? How do you decide what founders to speak to, and how do you navigate this altogether?
Well, honestly, it is difficult to manage so many things, and I think as a founder, this is not even my job to take so many additional initiatives and doing so many investments. Angel investments looks very sexy from outside, but I think I've been at that what do you call it, like that not even an inflection point,
the
but
cusp
maybe
of it,
cusp of it, where I think at a 50 kind of a count of investments, you run out of bandwidth severely because of two reasons. First, the whole value add of a founder investor is to spend time with the founder that you are investing in, right? Beyond 50, there is just no way you can spend material time or meaningful time with at least most or even minority of your investments. That's number one. Number two, once you reach that kind of a point, you naturally develop a network and end up creating a deal flow where you end up getting too many decks, and you also attract noise where you will have not so great decks also. So you need to have a process to understand what is the quality investment to make. Now currently I get roughly 2 to 3 decks every day.
Wow.
Right, and I'm not even like in the top, some top 5-7 investors of India, and it's usually every weekend I have to spend like evaluate this 15-20 decks, and there's no way I can do that. Some of the investors I know, like Sanjay and Rajan and all these guys, Anand and all these guys, they must be getting 10-20 decks every day. Now, who has time to go through 100 presentations every week? Right? It's impossible. So I think it's humanly impossible at this 50 age, and you have to kind of 50 count, and you have to convert either into a fund, or you have to have a fund manager, or you have to syndicate manager or something like that. And then also you will still end up spending too much time, because ultimately they are all portfolio companies, and the commitment being given is that we will give our time and expertise, right? And it's just not possible. So I don't know how anybody does it like beyond 50. I'm currently at a slowdown where I'm just kind of ignoring a lot of decks. I'm not sometimes responding also. I feel bad about it. But there's just no way to organize it.
Operationalize it, yeah. And like you
unless
said,
it is your full-time job. If you're a full-time angel investor, great.
Then of course.
Which I'm sure nobody's a full-time angel investor in this world. But
yeah. And like you said, angel investing has become sexy as a space now, right? Everyone has become an angel investor in tech, and especially the barrier to entry is so low. Now platforms have begun where you can invest starting say 10,000 rupees also, right? So everyone has become that. So how do you like differentiate yourself as an angel investor? Because I'm pretty sure you want to work closely with very smart founders. So apart from say keeping the capital aside, what are say 3 things that you bring to the table to any founder, be it in SaaS or otherwise?
Yeah, I think first of all, in today's world, everybody's an angel investor, right? So, and I feel this angel investment is technically it's an asset class, right? It's an early stage, high risk, high reward kind of a investment strategy. Until there is not enough knowledge about this being an asset class and not an aspirational thing to do, people will come and go, lose money, and there will be cycles where angel investment will become super sexy, and people will lose a lot of money when it will not become sexy, and again there will be waves, just like you will see investment in gold coming in waves, investment in public equity coming in waves. It's like an asset class. How I differentiate myself is that for me it is I don't treat it only as an asset class. I treat it as more of a give back thing also, because I remember I had gotten so much value from other founders. I remember in 2015-16 when I had raised my angel capital, Sanjay Mehta, who runs 100x.vc now. He was the angel who was on my board. I had other 29 angels on my cap table. Half of them I did not even know. Neither they had time to reach out to me, nor I knew them enough to
Get value.
get value in terms of what do I reach out to them for. And I would just send this usual updates to everybody saying that, hey, we look for help for hiring, connects, this and that. Nobody responds, right? So, and that's what I see happening a lot these days. So my promise is that I can be a call away for any operating level help. One thing that I had seen is that one of the biggest missing points, which other founders like, Girish from Freshworks, Anish from Capillary, Pallav from Fusion Charts, these guys educated me by spending time with me at an operating level, where I always had this fear that, can I ask this stupid question to my biggest investor, right? I'll get judged about it. And I see a similar fear in most early stage, especially first time founders. They don't have enough network. They don't want to ask stupid questions to the biggest check they raised from somebody, from a VC or an institutional fund, or somebody very, very flamboyant, successful in this ecosystem. But they want to have somebody who they can pick up the phone and ask a stupid question. Right. And I tell founders that I am that person who you can pick up the phone, call me 24/7. I'll always pick up your call. Be mindful of the time that you seek, but ask me specific question and any question. Right. Right? Don't ask me a generic question in terms of hey, how to launch in US. That's not there's enough content. I speak publicly. That's separate. But if you have an operating level question, a borderline stupid question, specific question, 24/7, and I think that works really well because all the founders that I've invested in, they all respect me a lot. In fact, I also seek their feedback that, is this helpful? Is this really a thing that you would have sought money in hindsight, for? And the answer usually remains the same consistently. And I feel that that's the pitch that works as my differentiator.
Right. Absolutely. And I think this is what founders want at the end of the day, right? Someone they can reach out to and ask, like you gave the example of Anand, right? You reached out to him with a very specific, right? So awesome. I think we are pretty much done with the questions, but we have like a fun segment here because we would like to know you a little better personally as well, and we got to know from your team that you like cars a lot, right? So what's the craziest car you have driven? What's the best car you have driven so far?
So I like cars, but I think the craziest one that I've driven was in Dubai. And in Dubai you can rent super premium sports cars on an hourly basis, which is pretty cool. Right, and then I've kind of tried Lamborghini Gallardo. I think about 3 to 4 years ago for the first time, and I'm not a very sports car kind of a person. So what I realized that I'm not a sports car person, but it was pretty cool to try that out, right? And I also kind of follow some of the other I think for me cars is less about driving versus understanding the engineering behind it and the machines behind it. So I like watching documentaries of it. I like talking to people who have truly engineered cars as a profession, right? And I seldom find those people in my business world, right? So it's difficult to now, extend that network beyond a point, but that's one thing I do.
Absolutely. I think I was reading a book called How to Build a Car by Adrian Newey. In case if you have
yeah, it's a beautiful one. I've not read it though. I'm not an avid reader at all. My attention span is very short usually.
Right. I think you like to travel with the team, vacations that you mentioned and vacations that you mentioned. What's the best place that you have traveled so far?
My number one on my recent list is
name 3. Chalo.
Number one though on my recent list is Kazakhstan.
Wow.
Almaty is a very unconventional place for Indians to go to. Almaty. And that is actually just a 3-hour flight from Delhi, which nobody knows about.
Wow.
And it's so beautiful. They have canyons, they have national parks, they have a party city, great nightlife, super cold weather usually. But that's the recent one. And it's a visa on arrival if you have a US visa. So it's super cheap, by the way. So I think that was like one of the highlights for me recently. Another one is that I do a lot of scuba. So I recently gotten my
Are you a trained scuba driver?
I recently got my advanced training done as well. So that is something that I enjoy doing. I recently did one in Bali where you dive with manta rays. And manta rays are like very large like 8 feet by 8 feet kind of fishes. and they kind of glide the ocean, right? And it's
Bigger version of stingrays.
bigger version of stingray, and they are not harmful at all. They come all the way towards to you, and then as long as you're stationary, they just kind of pass by you.
Wow.
They'll see you as an obstacle or something, and they just kind of pass by you. And it feels very peaceful and beautiful. And I think scuba gives me a good time where I can spend time with myself inside the water. So in the first couple of dives, you're always thinking about about your survival, because you worry about running out of oxygen, not natural to a human being. After third, fourth dive, and especially after advanced certification, you learn how to enjoy the flora, fauna.
Nice.
You can meditate inside the ocean also.
Right.
There's tons of other recreational activities you can do. You can do wreck diving, you can do cave diving, you can do night diving, manta diving, shark diving, whale diving, and there are tons of stuff. So my next on the checklist is my whale diving in Tonga,
Okay.
where you literally dive with the whales. Like you're diving in a huge whale, like blue whale, literally would. Tonga is in Oceania segment, which is further north from New Zealand,
New Zealand, okay.
in Pacific. Beautiful. So that's my next checklist.
Like in your bucket list. Awesome. And I think slightly drifting from travel here, but if hypothetically, if you had like say $100 million to spend on something, right? And what areas would you spend that money on? It doesn't have to be startups, tech, nothing. It could be, but it doesn't have to be. So what areas would you deploy that money on?
I think I would deploy that on. There's this whole new movement of sorts, and there are now non-profit companies formally running in this space is around the whole ocean pollution cleaning. And I'm not much aware of this space yet. I'm still learning. But that I find it very exciting, because there is tons of human waste and industrial waste that has gone into our water bodies, especially in large oceans, which nobody has even measured yet, and it is insane amount of waste, and that actually can be used to kind of produce recycled items,
Right.
and that does immense damage to the water world and sea world and the sea life and flora and fauna. So I feel that's one, and that's very still untapped kind of a market segment as well,
Right.
where there's only one company that I know of which has done a decent scale, where I don't know if you have seen on some of the documentaries, but they basically run 2 boats, and they have a total technology where they
have nets and
have nets, and they would just run a large 1 mile long net in the ocean, gather the microplastic, and then they would do it. A similar one is in Bali also, where they're doing the same from Bali's mangrove forests.
Right.
They have some technology for that design, right? So this technology is not my expertise, but I find it very, very exciting, because it's helpful. It has a business meaning to it, and it's largely untapped, where most people undervalue this whole segment. But there is a good model you can run out of it. So I think that's one thing I would invest a lot of money on as a business.
Yeah. And this is super ambitious as well, right?
And super ambitious as well. Very difficult to solve at scale, because there are tons of such areas where humans have caused pollution around them,
Right.
which is not even affecting us yet, because we are always talking about this air pollution only,
Yeah, but
and then wait till the other kind of pollution really starts hitting us.
exactly. And I think some 60% of our oxygen comes from the oceans, in fact, right? So it's crazy. And
I didn't know that, but interesting.
yeah. So suppose if you were to work on this super ambitious idea, who would be on your all-stars team from the Indian ecosystem? If you were to pick 3 founders to work on this challenge, who would those be?
Oh wow, that's a tough one. From the Indian founder ecosystem, who
Let's
would be
make it
on
global
my-
then. Let's make it global.
Yeah, you'll have to give me options, man. Who are the top ones that?
Kunal Shah, Ritesh Agarwal, Vijay Shekhar Sharma.
I would like, when you say Vijay, I would obviously say yes to it, because I've just known Vijay so well. I would pick Vijay number 1 is because and I would be honored to have him in my team.
Yeah.
But I think such large ambitious projects requires a lot of resilience. And things can go wrong for years and years, right? Until you see like a huge curve. And I think that's why I would pick founders who have been through it. They also have certain understanding about how governments react to things. So I think I would pick Vijay on that. Yeah.
Awesome, awesome. What a fantastic conversation we have had. Dhruvil, personally learnt a lot. So thanks so much, first of all, for giving your time and asking us to come to the office, because honestly, this is way more better than an online conversation. So thanks so much for everything, Dhruvil.
I enjoyed this conversation a lot. We went like really, really deep. So thank you so much for coming over, and thanks for all the interesting questions.